So this week we've got three key messages for you. An update on the markets firstly, secondly a look at the EU referendum and event risk more broadly, and thirdly a look at high yield and the high yield market. Message one, market update. So markets in the last week have been fairly muted. We've seen the S&P hovering around 2100 and the FTSE at something in around 6200. But we've seen muted responses elsewhere, notably in both the commodity space and in fixed income. Message two, the EU referendum and event risk. So given that we're now at the beginning of June, we've got the EU referendum very much in sight. We'll be waking up 3 weeks today with the news of whether we're in or out. Even though the markets have been fairly muted in the last week, I think it's possible we're going to see a lot of noise between now and the 23rd of June, and it's possible that we could see a pickup in volatility over that period. I think what's important is that we need to bear in mind that event risk in the market is largely unavoidable. It happens. We're going to move on to the US election as an example thereafter. So this chart shows equity market behavior, and the grey bars are the return lines annually, and the yellow squares are what we call the drawdown, which is the movement from the highest point to the lowest point in that year. And what this tells us is that volatility in equity markets is largely unavoidable. How we mitigate this volatility? Well, we focus on what's really important as opposed to all the noise, and by constructing portfolios that have a high quality, well-diversified mix of assets that speaks to long-term returns. And we're confident that portfolios are currently well positioned for the result of the EU referendum. Message three, high yield. So the high yield market is a really interesting part of the fixed income market. Typically today in a balanced portfolio, about a third of our exposure would be in this space. Last year, high yield was a poor performing market. This year, it's a very good performing market. The index is up something like 6% across the board. High yield yields about 7.5% and has been the biggest contributor within the fixed income space in our portfolios.